we also keep an eye on like the news coming out and see what the developments are in the space. And like on that front today, we actually had a pretty big another hack happen in crypto,
Oh yeah.
where stake.com is a pretty much the biggest betting platform. They're based out of Australia. They got hacked for $41 million from their hot wallets, which is basically the wallet that they keep online to do payouts for their daily operation. It's not like their entire treasury got robbed. It was the portion of their treasury that they keep effectively online. And what happened, as far as what I've been able to turn up, is that it seems that there was a breach of security for the private keys for that hot wallet, which the hacker was able to acquire the private keys and then drain this wallet across multiple blockchains. So I think they took like 10 million on the Ethereum mainnet, like another 12 or 13 million on like the Binance Smart Chain, Polygon, and all these other blockchains that have assets within them in this hot wallet were all drained out. And obviously people who participate with betting on this site, it's a gambling website where people make an account. They'll send crypto assets from their wallet, or they can use Apple Pay or their credit card to fund their account. And then they'll use those funds to, trade in gambling games such as like blackjack, or, there's a bunch of weird.
So it's not
dice
just
ones
sports betting, is it?
And
it's actually gambling.
Exactly. As is full-on gambling, like slot machines, digital slot stuff. And then there's also a big sports betting marketplace where you can bet on the outcome of sports, as well as esports. Like if you like to watch like CSGO tournaments, you can place bets there on like the winners of those. So they really service.
Did they partner with Drake?
Yeah, that's right.
I read this.
Yeah,
like Drake is the official partner,
like partnering spokesperson.
For these guys, which is huge.
So hopefully the Drake fans out there didn't get licked too hard. Although I will say that stake in the defense of stake.com, they have already shored up their reserves and credited back any user who was affected by this. So while $41 million is a lot of money, they have a lot more money than that. It's a very large protocol. Yeah, you can see their volume.
Them refunding users, like that's.
Yeah, so it's really like cool. Anyone who had an account or anyone who had made a deposit during this exploit period where the deposit maybe was stolen as part of this ongoing theft has either been made whole and credited to their account or is being considered for a reimbursement. So
I guess Drake's fans are happy.
Yeah, exactly. So as much as it sucks to see these kind of exploits happen, it does seem that it was limited to their hot wallets, which hot wallets are notoriously the most exposed to such exploits, because basically the term hot wallet just means a wallet that is online, exposed to the internet at all times. Versus a cold storage wallet, which is a wallet whose private key is never been exposed to the internet at all, and therefore you can't steal the private key, because where are you stealing it from? It exists offline in a physical place. So
right.
Yeah, so it is a lot of money, but it's a very big protocol, and so I don't think people who Drake onboarded into this are necessarily at a loss, but it's also not super confidence boosting to see a project get robbed for that amount of money, even if it is just operational capital for them. It's like
right.
It's not the end of the world, obviously, to this business, but it's also $41 million.
Yeah, we've seen a lot of hacks this bear market. So
last year we've
safe.
seen a lot more hacks, and I will say, while crypto is still riddled with scams and hacks and exploits, there is absolutely a trend of those decreasing since last year. I think we're down about 70% less value being stolen year to date this year versus year to date last year. But those metrics are also a little misleading, considering that there's a lot less liquidity and a lot less TVL in these protocols this year versus this time last year. Less money to steal doesn't mean that it's getting cheap. It doesn't mean it's getting safer. It means that there's just less liquidity to steal.
Right.
But as always, we do kind of like, when we do recommend or when we do share our the crypto protocols that we do participate in, we'll share ones that we've vetted personally and are comfortable putting our own assets in. And
I haven't used this. I don't think either of us
no,
like
no, I
none of
don't.
us have used stake before.
Yeah, I don't usually get so into crypto gambling to begin with, and even
Yeah, I've never tried it.
even then there's on-chain, like I'm a big advocate for on-chain protocols where like I don't see a reason to deposit crypto into some account and then access it from there when I can just send that crypto per bet from my wallet each time. Like, why do I need a
Right.
secondary account that could be stolen from me? I'd rather stay in control of it in between betting. And when I win a bet, I'd like the payout to come directly to me. I don't like the idea of having a deposit and a withdrawal phase in between me and value. And that goes for like, trading also. So like we'll trade like recently, like GMX did their recent update to V2, which GMX is a perpetual future contract market. And then like cap.io is one that we trade often in our charts too, or in our chats. And, those are all your wallet directly linked into their protocol. But then obviously the biggest one in the entire world is DYDX. And that one you actually deposit into their contract, trade from within the contract, and then withdraw your assets back out. So both models, exist and do very well. And obviously I would say the benefit of the depositing into a contract model is that then you can offer cheaper trading fees since you're not necessarily having to broadcast every single thing.
But then you're at the mercy of the protocol.
Exactly. It's like, would you prefer one-click betting or, click and sign a transaction each time, but the added security of you're the custodian of your funds versus this protocol is. But, it's definitely a big news thing, and you're going to see probably some articles about this just because $41 million is such a large, attention-grabbing title kind of number. But it is worth noting that, this is a very large protocol backed by, big money, decent, like they have, big endorsements from celebrities like Drake.
If they can get Drake to endorse on this.
Exactly. And they're not, they're registered and operating legally out of Australia. And so, it's Australia isn't the United States where I have jurisdiction to follow up with stuff, but it's also not like the Isle of Man where nobody has, any or anything. Or some of these
like
crypto,
Binance, nobody knows where its office is.
Yeah, or like it moves every couple of years, which is just
it's like into some obscure island. Yeah,
exactly. You have it some like tax haven where there is just everything's anonymous. There's no like real people behind this stuff. At least in the Australian like side of things, it's still a little bit more of a like it's a first world economy that's like verifying these operations, which is kind of instills the confidence that, along with the fact that they did repay and make people whole. And if they haven't made you whole yet, there is every intention for them to do that. And I am pretty confident that will happen. They'll be able to cover this $41 million. And I don't think, if you didn't know about this, you probably wouldn't even notice. Like, you could go onto their site right now and play, place your sports bets the way that you have every other day. And you wouldn't even need to know that something happened, which that is also impressive. And I'd have to say kudos where they're due here. When somebody does get exploited, making the end user, very immediately whole and not exposing them to loss from minute one of the exploit, that's well handled. So, it's not great news, but it is nice to see, it's nice to see bad news handled in a positive way in this space.
Right.
So I feel like that was definitely worth like bringing up and taking a look at, just because usually what we see is like, oh, there's a hack and everybody's fucked, whereas this is like, oh, there was a hack,
we're people personally
they're making it
gone
right
for that,
and they're making sure that, like, I think the downtime to the platform was maybe like an hour or something, where there was mismatched potential like values and stuff, so they handled it very quickly and professionally. So
that's cool.
Maybe I've never used it before, but it's on my radar. Clearly, it's like they're running a tight ship, it seems. Not tight enough to get robbed, though, so keep that in mind. And again, it did look to me that the exploit was a private key leak, meaning that their OPSEC, their operational security practices is OPSEC is short for, their operational security practices were not strong enough to keep their private keys from being stolen in the first place. And that isn't something that I can spin into a good light. So, it's not all good news here. But
right.
it's good to know that this is going on. A lot of the money so far from what I've seen, you can obviously track everything on the blockchain. The money they stole has been turned into Ethereum on the respective blockchains where it was stolen, and has been moved into separate accounts that are basically just sitting there now holding the Ethereum. It's unclear what they plan to do.
That probably makes it.
Most of the time, if the goal of the attacker is to keep the funds, what they'll do is they'll use a mixer like Tornado Cash is the big one that you've probably heard of, where they will send
which did exist, but doesn't. Anymore.
They haven't used it yet.
They got shut down.
But there's those protocols themselves, like are just deployed, where it's basically, you deposit an amount of crypto and it sends it to like thousands of different wallets and then back and forth to all those wallets, eventually, withdrawing that amount of crypto back into like 20 different wallets that are brand new and that you own now. And so you start with basically dirty money, and it comes out clean-ish on the other end. But of course, it was tumbled through that protocol. And for a lot of jurisdictions like the United States, if you were to deposit from a wallet that has interacted with Tornado Cash, they would seize your assets. So it's basically a sanctioned crypto protocol. But obviously, that is an option that could happen. It's also possible they are going to keep the money in the fund. Like for now, what we know is that the money's just sitting in these wallets. They could wait and then let the team offer them a bounty, and then basically act as a white hat hacker, where they return the funds in exchange for some sort of
reward.
Yeah, some sort of settlement, effectively, that like a bounty for them, basically acting as someone to prove that they had this vulnerability by actually exploiting it. Because I have seen quite a few people who have reported vulnerabilities to protocols that should have fetched them a bounty, and those protocols then fixed or patched the vulnerability and didn't pay up, or paid up very little, paid up a few $100s when this thing saved them potentially millions of dollars in exploit. And so it isn't necessarily unheard of for somebody who's an honest player to actually execute a vulnerability and exploit a protocol once they find a vulnerability, in order to be the first party to exploit the protocol and save the money from the team who's mismanaging it or mishandling it with this exploit potential. And so, for example, the Euler protocol, this is a little while ago, they got robbed for like $130 million. I think like several other protocols are built on top of that one. For me, it was Angle, which issues AG euros. They had their backing stolen pretty aggressively, and it made the AG euro lose peg with the regular euro. And then 2 to 3 weeks later, the hacker returned all of the money. And it was, at the time, it kind of worked out in my favor because I just left my liquidity pool sitting there. And so, I was in euros and dollars, and then the euro lost peg, so my dollars were used to buy a bunch of euros lower than peg. And then when the euros got their peg back, then they sold them back, and I ended up coming up on both sides.
Nice.
But obviously, some people saw the peg fell, and then they pulled from the pool, they sold at a loss, which is also not the wrong idea. If the money doesn't get returned, then those backings don't just come back. And it's important to kind of keep track of all this stuff. So I'm very curious to see how this plays out. This is very new news. This is happening today. So in the next few days, I'm sure we'll see, was this a white hat operation? Are they going to return the funds? But at the end of the day, it does seem like the end user of the stake.com platform shouldn't be affected or expected to pick up the bill here. So,
but we never use this, and we always say, be cautious.
Exactly. And it's, it's gambling. Gambling's fun, but what we do is invest. So we're not necessarily.
Yeah, we look to trade and invest. That's what we're about. Like, we don't gamble. uh, and so because of that, we don't really use these protocols.
Yeah, exactly. It's if and the whole thing is like, and we've shared this, of course, as well. But when I do want to gamble and play with a protocol like this, I make a brand new wallet. I send an amount of, like, let's say I want to gamble with $100. I'll send $100 to that wallet, and then I'll connect to those protocols from that brand new wallet. So even if the contracts I'm connecting to or the protocol itself becomes malicious or compromised, I'm only exposed to the clean wallet's exposure, because that's the only wallet that I have that actually has permissions to engage with these protocols to begin with.
Right.
And that's a best practice kind of that we also preach when it comes to, taking your own operational security practices very seriously, because in crypto you are the first and last point of contact to these assets. If you you lose your money, it's gone. There is no customer service. You can't call 1-800-Bitcoin. They're not gonna help you recover something that you sent to the wrong address.
Or